Okay, so in this video we're going to be talking about ETFs and in particular how they are taxed within Ireland. With the likes of retail apps like Trading 212, DeGiro, Book Zero, all these different apps that are out there that make investing really accessible, ETF investing has become very popular, and especially that you can invest in these kind of funds for very little cost. So many people have been investing in them somewhat blindly, not knowing what the tax rules are. Many people assume it is under capital gains tax, the same as normal stocks, but I'm afraid that is not the case. I recently did a video on TikTok as well showing how quickly you can invest in an ETF, and I believe it only took about 10 seconds, so as I said, very accessible, but it's important that you know the rules when it comes to the tax. So for this, we're going to be looking at three different areas. First of all, we'll have Irish domiciled ETFs. Next up, we'll have EU ETFs, and that is separately broken down to UTIS and also non-UTIS. And then finally, we have US and rest of world ETFs as well. Now keep in mind, when I say Irish domiciled, I just mean that is where the fund is set up from. It doesn't mean that it only invests in Irish companies or anything like that. So for example, the Vanguard fund VUSA, which tracks the S&P 500, is actually domiciled in Ireland, and that's why we're able to invest in it, but it tracks the S&P 500, which is the top 500 companies in the US. So just to reiterate that, because it's definitely a point that catches a lot of people, Irish domicile doesn't mean that it only invests in Irish companies, it just simply means that's where the ETF is set up from. So let's first of all look at these Irish domicile funds, because these are the ones that you're most likely have access to invest in. So the way that this one works is actually something called exit tax, so not capital gains tax. So that means that you do not get your capital gains tax exemption of 1,270 when it comes to Irish domiciled ETFs. Instead, your profits are taxed at 41% exit tax. A very quick example on this, because again it's something that catches people. If I invest €100 in the VUSA Vanguard fund, for example, and it grows to €150, I then make the decision to sell all of that position. That means I have a realized gain of €50, and that is the amount that will be taxed, just the €50. So it'll be 41% of €50. And that works out to be €20.50. So the exit tax is not on the full amount, it's only on the realized gain. I often get asked the question, is it even worth investing in ETFs when they have a tax rate like this? But people often get confused thinking it's the whole amount that gets taxed, but it's actually just the profit. And in the case where I would invest 100 in the same fund and it drops down to 90 and then I sell that position, I do not have any tax to pay because I've made a loss on that. Unlike stocks where you can write off losses against future profits, you cannot do that when it comes to ETFs that are domiciled in Ireland. When it comes to dividends paid from these ETFs, they will also be charged at 41%, not your marginal rate, just a flat rate of 41% for everybody who invests in these. And then finally, we have the deemed disposal rule, and that applies to Irish domiciled ETFs. I'll quickly explain the deemed disposal rule for those of you that haven't heard of it. Essentially what this means is if you invest in an Irish domiciled ETF, after 8 years from your purchase, revenue will have automatically assumed that you've taken your profits and therefore it will expect you to pay tax on that. Do keep in mind, this does not mean you have to sell your position, but it does mean that the tax will be owed in this case. Next up, we have EU domiciled funds. Again, as I said, this is broke down to UTIS or non-UTIS. When it comes to UTIS, it's the exact same as the Irish domiciled ETFs, so that means it's 41% exit tax and also 41% on dividends, and the deemed disposal rule also applies. For non-UTIS ETFs, these can be quite different in terms of their fees, so it's definitely worth checking out the specifics of the fund you're investing in that case. But generally, most of the ones available to us are Irish domiciled ETFs as well as UTIS funds. And finally, we have US domiciled ETFs and other world domiciled ETFs. These work the same as general stocks and shares, where they fall under capital gains tax. So that means any dividend income will be charged at your marginal rate, which is 40% or 20%, depending on how much you earn. They will also fall victim to PRSI and USC charges. So that essentially means that your dividends are taxed around 52%. There is no exit tax on this one, just capital gains tax. So that means you'll be charged 33% on your profits on these ETFs. And it also means if you incur a loss, you can write that off against future profits. And finally, the deemed disposal rule does not apply to US or other world ETFs. So that is it in a nutshell. Hopefully it was helpful for you guys. I tried to keep it quite short and quite sweet. If you did enjoy it, go ahead and drop a like on this video. Really appreciate your support and it really does help out the channel. If you're interested in this kind of content as well, make sure you do hit that subscribe button for lots more like this. Also, don't forget to claim your free share with Book Zero, link down in the description below. On there, you can invest in lots of different ETFs, like the ones I've mentioned in this video, such as the VUSA Vanguard S&P 500 fund. Thanks for watching, and I'll catch you guys in another video.